Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague
Yatin Mota. And as always, it's a pleasure to be on Closing Bell. Obviously, when the markets are hitting all-time highs, I think it's a great day to cheer.
Of course it is, and the fact that the missing link, the Nifty Bank index has also started firing on all cylinders.
Right.
That's something that has been was spreading cheer in today's session. But the Nifty did cool off from the day's high, but we did hit a fresh record high and crossed that 23,600 mark on the index for the first time. In fact, the Nifty Bank as well, Yatin, came very close to that 52,000 mark, right?
Yeah.
51,940 is the kind of level we hit on an intraday basis before cooling off a bit. Nevertheless, 51,400 is where we ended for the Nifty Bank index. Aside of that, if you look at the broader end of the markets, the outperformance was there over the last few sessions, but that kind of fizzled out because the Nifty mid-cap index ended 1% lower in today's session. So, sectorally, of course, banks were the clear winners, and the IT pack also managed to stage a good comeback from the day's low. So, the underperformers started performing today, and the overperformers or the outperformers took a breather today. So you had the likes of defense and shipbuilders, they took a breather. Yeah. But let's talk about the basic indices and talk about how India VIX has also managed to surge once again. 6% kind of an up move coming in on the India VIX index, the volatility gauge. The NSE advanced decline ratio today was tilted in favor of losers. So the advanced decline ratio on NSE was around 1:2. Sectorally, banks, IT were doing well, but realty took a breather. That was the star performer last week as well. But today, profit booking coming in there. Sobha among the Nifty 500 components was among the top loser on the index. In terms of individual movers on the Nifty, Axis Bank, HDFC Bank and ICICI Bank, these were also the top contributors yesterday. Today as well, they were the top contributors for the Nifty gainers. Aside of that, Kotak, Indus and Infosys as well, some IT names were among the gainers on the Nifty, and SBI as well was doing well. On the flip side, you had some consumption names, Maruti, Bajaj Auto, Titan, all of them were under pressure, and so were the likes of L&T and Airtel. But Yatin, the big story aside of the banking rally was the flurry of block deals that we saw on the Wall Street today, right? Over 25,000 crore worth of block deals. Take us through some of them and tell us which ones were the stocks that saw major action.
So first, obviously Indus Towers and Bharti Airtel bought 1% and 18% being sold by Vodafone PLC, and the total block deal value was nearly 18,000 crores with cash volumes surging over 20,000 crores. If you look at the future and option trade for Indus Tower, the open interest MWPL, which is the market wide position limit, has crossed 225%. So I've never seen a stock intraday reaching that 225% mark. On 95% there is a F&O ban, but yes, crazy trading activity in Indus Tower. ZF Steering promoters Wapco, they sold shares worth 1,500-2,000 crores. We had a block deal in Gland Pharma wherein their promoters Fosun, which is a Chinese pharmaceutical giant, they sold their 5% stake, and we also had a big block deal in ZF Steering. So clearly a lot of MNC stocks and MNC companies trimming their stake. We also had a few large trades in auto ancillaries. So a number of block deals in trade today, and as Nandita was mentioning, 25,000 crores, a huge number for the cumulative transactions which happened on stock exchanges today.
Right, Yatin. But Yatin, fertilizer stocks were once again extending rally, ahead of the GST meeting. So the likes of FACT, RCF were once again gaining in excess of 7 to 10% or thereabouts.
So, the fitment community or the fitment committee, beg your pardon, is considering to zero the GST on fertilizer to probably pass on the benefit to the farmers. Currently, there is a 5% GST on fertilizer which is proposed to be nil, but obviously there is an inverted duty structure, a lot of other things, technicalities that needs to be sorted out. But yes, on the announcement or the news that probably there will be a consideration for nil GST on fertilizers, these stocks moved up. Also sugar stocks moved up today. EID pair 11% up, Triveni, Renuka Sugars, all of these stocks up 7-8%. What did not do well is, the stocks like Sobha Developers 6.5% down, Mazgaon Docks 5% down. Some profit taking broadly in these defense counters and shipping defense companies. And probably that is the reason why we saw the mid-cap index see a decline of nearly 1%, 0.5% down for the small cap index as well. Advance decline ratio broadly 2:3. So apart from general profit taking, X of banks, there was a market churn or profit taking which happened as the markets is nearing that record high level.
That's true, Yatin. But on that note, let's take a look at the stocks that are on our radar. And we've already touched upon Indus Towers, but just a little bit of details there. Vodafone was looking to sell somewhere around 9% stake yesterday, but they've upped the deal size to 18%, which they sold for 15,300 crore rupees, right? And this block deal, I think, is the second largest after BAT's ITC stake sale, which was worth somewhere around 17,000 crore rupees or thereabouts. The buyers were, of course, Bharti Airtel, as Yatin mentioned. They bought 1% stake. Domestic mutual funds and some FIIs, including hedge funds, maybe among buyers. Airtel's stake now stands at 49%. Till about March, the shareholding pattern was Bharti Airtel owning somewhere around 48% and Vodafone owning somewhere around 21%, and the rest was owned by public shareholders. But now Airtel stake is at 49%, Vodafone stake is at somewhere around 3%, and the rest with, of course, public shareholders. The float adjustment in the passive indices is expected to happen in the next few days, but Nuvama estimates suggested that they could they were expecting passive flows to the tune of $200 million, right, both for MSCI and FTSE. Proceeds will, of course, be used for repayment of debt to existing lenders, and that includes the outstanding bank borrowings of somewhere around 1.8 billion euros secured against Vodafone's Indian assets. Aside of that, if you look at some bit of a background, Vodafone had been searching for a buyer for the remaining shareholding in Indus Towers since 2022, but an agreement with Canadian pension fund had fallen through in 2022 itself. In February as well, we saw private equity giants KKR and Canadian pension fund selling their stakes in Indus Towers. Aside of that, just talking about the basics, we accounts for somewhere around 35 to 40% of the tower company's revenues, and it had already started repaying the debt to Indus that had boosted the tower company's third quarter profit. Now with this, the profitability of Indus Towers could be boosted further, and if you look at Vodafone, the street is fairly bullish on that stock ever since it raised funds via the follow-on public issue, right? And very recently, the company has also approved equity allotment to Nokia and Ericsson that could help raise as much as 2,500 crores. So Vodafone itself is trying to get on an even keel and raise funds to expedite its 5G rollout as well. So of course it bodes well for both Vodafone as well as Indus Towers, but let's see how things really proceed for Indus Towers, particularly after this stake sale, because this could boost their profitability. And Sunil Mittal himself was requesting Vodafone to in fact clear the dues and give a timeline as to when all the dues will be cleared, right? So this kind of removes an overhang.
Absolutely removes an overhang, and something needs to be watched as to what Vodafone PLC plan is with respect to infusion in Vodafone Idea. Will they look to do that, or they would be looking to sell the residual 3% stake in Indus Towers, because still they have a 3% equity which is locked in for 90 days. But yes, clearly the telecom sector is looking at a turnaround in the coming days. Moving to financials from telecom, and clearly it was a day of financials with banks performing. Today Bernstein has come out with a report on Bajaj Finance, wherein they are quite bullish on the prospects of growth. In fact, they have initiated the stock with a market performing rating. Target is at 6,800. Now Bernstein believes that Bajaj Finance would be one of the leaders in the overall industry, but the competitiveness in the industry would increase. Probably it's to be seen that how really Jio Financial and other financial giants really took the India entry, and how aggressive they will be in lending moving forward. Bernstein believes that they still see healthy growth ahead with room for consensus earning cuts, given the fact that the sector is now going through several headwinds in terms of regulation. But the near term trigger could be the IPO of Bajaj Housing, which is a subsidiary of Bajaj Finance. The challenges of Bajaj Finance also include high challenges to the scale up from here on, and probably that is the reason why they have maintained a market perform rating on Bajaj Finance, because a lot of things need clarity for the next few quarters, especially with RBI scrutiny rising on NBFCs, scrutiny rising on credit cards and the co-branded credit cards especially, and also how do they really scale up from here on, because the base is quite high. They've grown excellently in the past few years, but now the performance of the management or the litmus test would be something that investors will be watching out for in the coming quarters.
Right, but ever since the embargo on two of the products was lifted by RBI, I think the stock has staged a good 7% kind of an uptick in the last 1 month. But although on a YTD basis, it's still in the red.
Right.
But the other stock on my list is Zomato. Of course, the company is in talks with Paytm to acquire its movies and ticketing business. Although both the parties have maintained that there is no binding agreement yet, but the street is fairly positive on a potential deal. In fact, Zomato, has got a buy rating from UBS, target price of 250 rupees per share. Remember, the stock is around that 200 level, 207 being the all-time high for the stock. UBS has pointed out that a potential buyout of Paytm's ticketing business fits in well with Zomato's going out offering that includes dining out and tickets for live events, etc. According to UBS, the preliminary calculation suggests that the valuations at which it is looking to acquire the ticketing business, which is somewhere around 1500 to 2000 crores, is fairly reasonable. On the other hand, JM Financial has also echoed this sentiment. They've said that such a deal will, of course, strengthen the going out offering of Zomato. In fact, it also includes Zomato Live, which competes directly with Paytm's event ticketing vertical, right? So this potential deal, of course, which I mentioned was somewhere around 1500 to 2000 crore rupees, would be of fair valuation. That's a view that even JM Financial maintains. And Paytm's movies and ticketing business, according to JM Financial, may be valued at 5 to 7 times FY24 sales. And a potential deal could actually put Zomato in the second positions in the events and ticketing space, just behind Book My Show. It has also maintained that the balance sheet is pretty strong for Zomato to facilitate such a deal. Elara Capital is also fairly bullish on this stock. In fact, they've also maintained that such a deal will not impact the overall liquidity for Zomato in a negative way. So net, if the deal happens, it will be a positive for Zomato, because of course it will put the company in second positions only after Book My Show, where its ticketing and live event business is concerned. But I think for Paytm as well, a lot of people are saying that it will be a positive, given the fact that they are looking to focus on their payment and financial business rather than other businesses like ticketing as well. But yeah, all in all, Zomato was up and about today, 6% or thereabouts, near about the 200 level. And
strong gains for Zomato, and what a journey it has been. I think the lows were some 30-35 rupees, and from there, what a comeback in the share price as well as management commentary, especially to do with the profitability of the business.
That's true, and I just wanted to say that in fact Elara has a target price of 280 rupees on the stock, another 80 rupees kind of an up move expected there, 48% upside from yesterday's close price. But I think with that we've come to the end of this edition of Closing Bell. No complaints, even though we saw some bit of a cool off in the last half an hour of trade. But if the momentum continues in Nifty Bank tomorrow, 52,000 is just a stone's throw away.
Absolutely.
But with that, thanks a lot from me and Yatin and the entire team for tuning in. Stay tuned to Moneycontrol for all your other news and updates.